Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, May 10th, 2007, and the market's closed. And we finally saw some selling in this market. I've been saying for a while that it looked like the market, or it felt like the market was overbought and due for a pullback, but there just wasn't the technical evidence. So I've been suggesting caution and smaller position size rather than fight the trend and get short when the evidence wasn't there. Well, today the Nasdaq 100 Trust was down 67 cents. That's a loss of 1.4%. And it finally broke this rising 10-day moving average. So we've seen 4 tests of it that have acted as support. Now I think that we'll probably see this market settle in down just under the 46 level, probably test down towards the 45.70 or so, and hopefully find support along that rising 20-day moving average. In fact, if they took it down towards that level, I think that would be a good case for or a good position for the market to bounce from next week. So if we look at the intraday time frame, we saw yesterday we had the breakout. This morning that breakout failed to hold on the gap lower, and that should have put you at caution, but these gaps lower have been bought lately. So if you did buy it, you should have been stopped out there. Now we've got the market back below this 5-day moving average, and look at the direction of the 5-day moving average. The 5-day moving average is now declining, and that tells us that it's time to be very careful here going forward for the next few days. I was looking for support at 46.75 first, so that was the level that broke this morning, and then it failed to really get above there and hold. You can see there were a couple there was a small probe above that 45.75 level, but it failed very quickly, and that's where the real selling came in these Qs. So we were also then looking for the next level of support to be 46.40. It broke down through there hard too. Now 46.40 then acted as resistance later on in the day. So it says that we do have lower highs and lower lows, along with a declining 5-day moving average on the short-term time frame. Whereas the daily time frame is saying it broke below that 10-day moving average. Now we can still give the benefit of the doubt to the buyers for the bigger trend. However, short-term traders have to consider this intraday action and say, now is not the time to be a purchaser of stocks. Now's the time to either sell short, scalping in scalp mode because it's against the primary trend, and be sure to take those profits quickly, or just to sit on the sidelines and cash. Tomorrow's probably a perfect day to not trade because the volume will probably start to slow down. It's a Friday, and there's better things to do on a nice day here at the what's looking like the beginning of summer weather outside. The spiders, SPY, this market finished with a loss of 1.08%. They were down $1.64. Also broke down and closed below that 10-day moving average for the first time in since really right in here, since about March 16th of the first. Well, actually, I guess we had 2 closes below it right here on April 3rd. But anyway, still, for the first time in more than a month, it closed below that 10-day moving average. So we're still in an uptrend. Don't doubt the fact that we're in an uptrend. We've still got a rising 10, 20, and 50-day moving average. But again, the market's gotten a little bit ahead of itself. We saw increased volume today, so there is a little bit of fear maybe in here, and that's good for the market. We need it to flush out and build energy for the next leg higher, hopefully. But again, we're not going to get confident in our purchases until this 5-day moving average starts to flatten out and then turn higher again. And to me, it looks like that's probably not going to occur till early to mid next week. So we've got support broken in these spiders. The support really was down near 50 and a quarter. I drew that wrong, but near 50 and a quarter. That level was broken. So in this market, we've also got on the short-term time frame lower highs and lower lows, and a declining 5-day moving average. So when we look at, we can look at this trend line as well and see that this trend line has been broken. The trend line that's in place since April 11th. And now we're just getting some profit taking. There's no reason to think it's anything other than profit taking until we start to see some evidence of bigger selling and trend changing on the daily time frame, and that clearly is not here yet. So basically what I'm suggesting is that tomorrow's a great day to take off. That's probably what I'm going to do, so I'm not sure I'm going to have a video with ideas later on. But just be careful if you are trading now from the long side, because in the short term, the sellers have taken control today. We have, we had an emotional event yesterday with the Fed. It brought out a lot of emotion, a lot of volume. Now, the 2-day trend is down, and that means that people bought on that news yesterday are losing money. So a lot of people got trapped by that Fed move. And good news comes out at turning points, or news comes out at turning points. Good news comes out at tops. Bad news comes out at bottoms. So I'm not saying that this is a top, but it may be definitely it's a short-term top that we can see occurred yesterday just based on today's action. But again, because the primary trend is higher, we'll probably take those highs out at some point. I'm not going to guess when, or what the catalyst will be. But the primary trend remains higher. The semiconductors today gave back quite a bit of their gains from yesterday, but they still did hold above this level right here, or right at that level. And I was really 2 days ago I suggested I thought the market looked like it was due for some further consolidation, but getting above 37.60 would put the buyers back in control. Now we're back below that 37.60, and this also suggests more caution is warranted. We are right on that rising 5-day moving average, so continue to give the benefit of the doubt to the buyers in the semiconductors. The daily and weekly charts still look strong, maybe getting a little extended here. So a little consolidation isn't a bad thing. The IWM, this market gap down and broke through support, and it's coming down again to test that important level that we've been watching over the last month or so, last 2 months or so, and that's the 81 level. So let's continue to keep an eye on 81, see what happens in there. We do have still a good positive trend here on the daily time frame, although with that 10-day moving average about to cross down through the 20, it might suggest we're in for a little bit more consolidation time-wise. All in all, with these markets, I think that the short-term trend, the sellers took control today, and that just means it's time to ease off the gas a little bit, tighten your stops. Hopefully you got stopped out of good positions today, and let the dust settle, and we'll see what the market has in store for us next. But we could have a little bit further selling to go before the buyers retake control. CMGI, we got involved in at $2.25 on Monday. I'd suggested raising your stop to $2.34. I would say you probably want to sell it on strength up near this 245. It seems to me as though with a weak market that this thing probably will come in. I'll say the stop is now 235, and I would not expect that stop to hold tomorrow. In other words, I would expect it to get stopped out at that 235 level. So I would rather say sell it on any strength if you get a strong open in CMGI. Pier 1 imports, we got stopped out of this one at 758 was the stop. So 8 cents in Pier 1. And this is probably more of an investor stock, and I just don't have the patience for that. All the stocks mentioned yesterday did not get entered. ADTN, I'd suggested buying above 26.22. That didn't occur. No reason to get involved. ARRS, I was looking for a move above 15.55 before purchasing the stock. That didn't occur. No reason to get involved there either. Cypress Semiconductor, I was looking for a pullback to 21.65 and then buy strength above 21.80. That didn't occur. And QUALCOMM, we were looking for a move above 44.50, which didn't occur. So none of those trades should have been entered. And cash is a position when in doubt.